What did I do with my water? God damn it. I left my water upstairs. Okay. Hey, everyone. Happy Sunday night, and welcome to Sunday Night Futures Live. We have the futures markets, which are now open. We're going to go over them in a moment. We're going to let them settle down. I'm going to talk about tonight's show really quick. I need to abbreviate the show tonight. We're going to go to 6:30 this evening. I have a hard stop. Something came up, and I need to get to it, so my apologies. We will go over all the futures action. I know it's important to you folks, so I'm going to go over your chart requests and the futures action, as well as setting the stage for economic data coming out this week, along with earnings and whatnot. So let's get to it. Let's share my screen and go to comments and say hello to people. All right. Jeff, welcome. Nat gas gapped up? Good. Good. We need that. Yes, please. Yoga Mac. Yes, please. Like, subscribe. Really help me out. I'm trying to get to 7,000 subscribers. I'm going to talk about YouTube in a moment. And I'm kind of upset with them because what I had mentioned on Thursday night, I had shared that I thought that they were going to either delete the video or demonetize, and they got me. So action needs to be taken with YouTube because I don't put up with that. Larry on board from Louisville. Hey, Larry. Overcast, 38 degrees. A little bit colder here. Tim, welcome. Trader Isaac, welcome. Bitcoin. Yeah, Bitcoin surging over the weekend. We'll go over Bitcoin in a little while. It's on my list. Franklin, good evening. A new week ahead with a lot of earnings coming up. Yeah, it's going to be a really, really busy week. I mean, we're going to go over the list of the trades that we'll probably put on. The key is, though, they got to pay us, right? They need to pay us or else we walk. We take on undefined risk, and to put on an undefined risk trade in a binary event situation, you need to get paid a lot of premium. That way you can get as far away from the share price at the time of earnings as possible. So ultimately, they pumped some juice, meaning volatility, into Netflix. We traded Netflix. It traded with inside the market maker move, but we were out 2 standard deviations on that trade. It was profitable, but it could have easily gone the wrong way for us. So we have trades in mind that we'll talk about tonight. Yeah, Trader Isaac, I have a Rumble account, but I got to hire a guy to fix it. I don't have time to figure it out. They make it very, very difficult to set up, at least uploading videos. I have not tried to live stream yet. I have canceled my service that I'm using right now because they do not allow simulcast over to Rumble yet. So Rumble, I know, has its growing pains, but yes, that is going to be a goal by the end of the year to be on Rumble doing live streams. Dane, hello, sir. Denny, hello. Yes, it is silly season. It is that time of year. Earnings season is silly season. And no better example than Netflix. Netflix had earnings that came out. Yeah, nasty weather. Same here. Netflix had earnings came out, and they missed by a mile on EPS. They beat slightly on revenue. I got a hair in my eye. And they went up on subscriber growth, but Lord knows if that subscriber growth was full price or even were they paying. So what did the shares do? They surged on Friday. So the shares of Netflix, despite the fact that the shares are up on Friday, are far more expensive today than what they were immediately prior to earnings. So yes, it's silly season. Don't let these people take parking space up in your head. Earnings are not wonderful. All right, let's get to the price action. We'll go with equities as we normally do. Let's begin with the NASDAQ. These are 15-minute charts. Let's get rid of this. NASDAQ coming in slightly, fractionally. This is going to settle down. This could easily reverse. Let's set up our alert here. Do we get higher highs? I think what's important to keep in mind about all of indices is that you have a lot of overhead supply above. So the good part about this market is that if you're not caught up in the hype from CNBC and Fox Business News that we're in a no bull market, and you're aware of the fact that you have a lot of overhead supply, it's a two-sided market. You're going to make money long or short, and it's a really good thing. The key is waiting for your opportunities and your setups, which is exactly what we did last week. A couple of trades that we put on was shorts, and it was an up week. So we made money there. QQQ. Ugh, come on, Bob. All right. So a little bit of weakness on the NASDAQ, not much at all. I want to know whether or not we take out the highs of Friday because that would indicate a new weekly higher high. Looking at the Dow Jones Industrial Average, it too is down fractionally. You know, we could easily see a pullback here to 33,400. If that fails, maybe here. Yeah, this is a probable support level at 33,280 on the Dow Jones. Now for the Russell 2000, you can see up here I have highlighted resistance. We'll turn this green because that is now a line in the sand, which if we close above it is very bullish. But right now we're down about the same as the NASDAQ fractionally. So we're in a trading range. Taking a look at the S&Ps. All right, so kind of interesting here in that we're struggling on the S&Ps. They're down fractionally. The thing to keep in mind is that this 39.84 level is beginning to be, if we close down below the support level, a little bit porous, meaning we had broken out here, we consolidated, and now we're threatening a breakdown. You don't want to see that. You want to see higher highs, and you don't want to see support levels break. And a little bit of buying coming in here now. Again, so early on in the trading session, very thin volume. We could easily be up by the time I end the live stream. SPY, higher highs. Okay, so equities flat. Let's call them flat, to be fair. Now, looking at the US dollar, the dollar is yet again breaking down measurably. Let's go up to a 4-hour chart, give you the higher level view of what's going on here. The dollar has not taken out the lows of last week. I personally think that on a weekly time frame, we may get a rally at some point in time, maybe this week, maybe the following week, because we flashed a doji star formation. That's a sign of indecision and that we may get a trend reversal, and the trend has been down. Therefore, we're anticipating a counter trend move on the US dollar. But right here, right now, the dollar is gapping down, looking weak. And my guess is that when we take a look at the euro and possibly the yen, that S&P is catching a bid here. That they may be bidding as well. Yeah, euro breaking out. New higher highs. Japanese yen, which was under pressure last week, it closed down on the week, is firming up. We're in a wedge formation. So as these gain strength, obviously that's going to be bearish for the US dollar. What is that bullish for? Commodities. It's also bullish for equities, to be fair. Let's take a look. We'll begin with gold. Gold is not benefiting right now from the weaker US dollar. but we are holding 1900. It's a critical support level on gold, and we're spending a lot of time above that mark now. So I think that we're nearing that juncture where people have to wake up and realize that gold is, for the past 2 years, is vastly outperforming the overall market. I mean, yeah, it had a weak back half of the year, but it still outperformed the S&P 500. It was a store of value. Now, last week, gold was strong, but the gold mining stocks, oddly enough, were all very, very weak, including the silver mining stocks. So maybe a pause here that refreshes, but gold at current, down on the session. We remain very bullish on it. Let's take a look at silver. Silver up as well. It's been consolidating. 4-hour chart. It's been consolidating here. So not a major need to get long here, right now. But if you're not long of it, consider putting some on. And if we get a breakout above 24.25 on spot silver, it's going to be game on to the long side. This is a very, very thin market. Silver is a much smaller market than what is gold. Taking a look at energy prices. Now, oil down a bit, but this is a 4-hour chart, not insignificant. We broke out last week above this upper band of resistance. We're probably going to do a retest. Then we want to know whether or not we break out. I'm just going to put an alert up here because I want to know if, in fact, oil begins to put in new weekly higher highs. Why is that important? It's important because we have a Fed meeting coming up. And they have to make a decision. Do they pause? Do they watch and wait and see if their rate hikes have done the trick, as it appears as though they have, according to the PPI and the CPI? But the one wrench that could be thrown into the cogs of the Fed's decision is if you have oil prices beginning to break out yet again, along with food prices. Not gas. Nice move up higher here. Nice move up higher. So we have a long position on Boyle. And I was liking the setup here last week. And I said, you know what? Let's throw on a long call spread. So what we did is I went in, we bought an in-the-money call option going out to, like, Jeff, I think it's April or June. What do we do? And we bought the I think it's the June contract, I think. In the money call, and then I sold a deep out of the money call option as well. That helps finance the trade. So we are now net long of nat gas, in addition to a 1250 put that we're short of at the 1250 strike Boyle. And that short put is actually a bullish trade. It's a bullish trade. So we're technically net long of nat gas. So nat gas popping up here. We've seen this before. You know, we're not going to get all excited here. We've seen fades. We've seen headlines about a polar vortex come down. I think it was this time last week. What happened? Natural gas finished lower on the week. So good to see. We'll watch and see how we close out the day tomorrow. Do we close strong on rising volume? Then we'll decide whether or not we want to add more to the position. Right now, we're adopting a very cautious wait and see approach. Now we're up 9%. I like the fact that we gapped up to consolidate here what appears to be a consolidation along the 20-period moving average. Good stuff. Now, taking a look, let's go to a weekly chart to see how ag prices did last week. Before I leave natural gas, you could see this is a nice gap up weekly time frame if we hold it. Now, moving on to ag. Corn broke out last week. Is this week? No, this is last week's price action. So I'm sorry. We broke out actually 4 weeks ago. Failed here, rebroke out the week prior to last. Last week, a continuation move up higher. A little bit of selling off the highs. But now you're seeing oil prices move up higher, the beginnings of potential natural gas moving up higher, ag moving up higher, at least corn. We don't know about soybeans yet. Let's take a look. Soybeans continue to consolidate. This is last week's price action. We closed down. They tried to take it up. It was rejected. Wheat, it's breaking out here. Wheat is breaking out. This is last week's price action. Let me amend that. We have broken out. It's more of a breakout in time rather than price, meaning we just simply traded sideways outside of this wedge formation. So wheat prices are in all probability moving up higher. Let's go to some folks that have joined in. Sup, what's up? Come on, Productions. Check out Alta Short. Okay, we'll check it out. As a matter of fact, let me make notes. We got to be efficient tonight. Again, folks that are just joining in, we're only going a half hour tonight. I have a hard stop. All right, but we will be doing chart requests. Jody, hello, Jody. Hi, everyone. Not late. Was watching on my phone. All right, you get the pass. That's 2 weeks, 2 sessions in a row now. SPY. We're gonna go over SPY Yoga Mac in a second. Seasonality. We're definitely going over seasonality. I have that ready to go. Paul, hello, sir. All right. Did we miss anything? Let's do a quick check back in with equities. S&Ps. They tried to recapture support, bit of a rejection there. Okay, really quick. S&P. Before we begin, so on Thursday night, I did a live stream. It was titled "Is the Matrix Imploding?" I played video of Bill Gates, video of all these lizard people over in the World Economic Forum. They demonetized the video, and my message to YouTube, not that I'm a big player, but I'm certainly a vocal person. I do take action. I don't care about your monetization. I really don't care. I don't need your money. So to protest, two things are going to happen. A, I demonetize myself. The best stock charts for the new trading week, it was initially monetized until I saw this. Today, I demonetized that video. I'm making no ad revenue on it. This live stream here, if you're watching on the replay, you'll note there are no ads. There will be no ads on this channel for the next month. So they want to demonetize me one time, I'll go 30 times more. So I don't need to worry about YouTube's pennies that I don't need to worry about that. So it is not my main income by any stretch of the imagination. So YouTube, I love the channel. I love the forum, but I will not be bullied. So adios. So S&P 500 weekly chart. It looks as though in all probability, we are probably going to move up higher this week. But I mentioned earlier that it's probably going to be a two-sided market. Right? You're going to have some buying and some selling. Down days, up days. No great shock here. Why is that? It's simple. We have a lot. Go to a monthly chart really quick. We have a lot of overhead supply here. We are in a bear market. We are in a recession. So to expect that this market's going to go straight up higher without stopping, it's kind of silly. Right? So I think the bias, as I've said from the beginning of the year, I said we're probably going to rally. Even though I'm bearish longer term, we're probably going to rally. So my take on the market moving into the new trading week, we finished at the highs of the week. Excuse me, we finished at the highs of the session on Friday. That sets the stage for a continuation rally. Now, that being said, resistance immediately above. We tapped it last week and we got rejected. If we manage to break through the highs of last week on the spiders, which was at 400 or 4,000 on the SPX, we're coming up here, 403.70. And we'll see whether or not we get through. Now, right now, the market needs to earn our investment dollar. I'm not going to put money down hoping that the market breaks through these resistance levels. I would rather pay more after they successfully break the market out up and above these resistance levels, because my probabilities of profit are measurably higher rather than taking on too much risk right here, right now. I'd rather do earnings trades rather than invest the money in the stock market. Now, seasonality wise, and folks, this is brought to you by TrendSpider, automated technical analysis, 35% discount code below. Going back 19 years, we have a week that's generally up 50% of the times. So last week was 37% of the times. We were down last week. This coming week, 50-50. Expect a back and forth market, two-sided market. Next week is a traditionally weaker week, pardon the pun. Now, taking a quick snapshot of the triple Qs, which is pretty much a different market of late, and the S&Ps. The triple Qs last week, they did a retest, and this is kind of what we're looking for on the S&P 500. We broke out the week before last on the triple Qs weekly time frame. Last week, a retest of the breakout point. This is a bullish setup. So this is why I'm saying, in all probability, depending upon the sector, technology should head up higher. I don't like the volume last week on the semiconductor sector. A little bit of a warning flag on the track there. I don't like the volume across the board, to be honest with you, but the semis were really weak. So be careful. We're having a breakout on stochastics. So I think that we're probably going to move up higher again, backing and filling. All right, I'm going to play this for you. This is from the movie. I forget what it's called. I think it's called Trader. And this is Paul Tudor Jones, one of my heroes. I saw this on Twitter, and it's so important to adhere to this. You cannot listen to this all the time. So I'll play this for those, especially new traders out there, or those who can't get consistent profitability. Let's listen.
Always in control. Never wishing. Is always in control. Never wishing. Always trading. And always, first and foremost, protecting your ass. And that's why most people lose money as individual investors or as traders, because of the fact they're not focusing on losing money. They need to focus on the money that they have at risk. How much capital is at risk in any single investment they have? If everyone spent 9% of their time on that, or rather 9% of their time on pie in the sky ideas about how much money they're going to make, then they'd be incredibly successful.
Okay, I shared out that link. I just wanted to share that with everybody. Very, very important. Paul Tudor Jones, one of the very few people I have a lot of respect for on Wall Street. All right, earnings coming out this week. We have the ones where we want to trade. Lockheed Martin. That gave us a bit of a challenge last quarter. 3M maybe. Microsoft definitely. Boeing, a strong possibility. Tesla, a strong possibility. And that appears to be it. Yeah, that's it in terms of earnings. So earnings are really going to heat up this week. Economic data coming out. Leading economic indicators, watch out for this. This is what the Fed watches. PMI, Purchasing Managers Index. Thursday, initial jobless claims. Real GDP, first estimate. This is for Q4. Well, then we're going to get durable goods. Core capital goods orders. Friday, the PCE price index. This is the Fed's favorite inflation metric. This is the final one before their next meeting. So let's pay attention to it. We also get the UMISH Consumer Sentiment Survey. So a lot of economic data out there, but let's face it. This is going to be all about earnings this coming week and for the next couple of weeks. So this takes second place to earnings, which are coming out. Are we cheap here? We are not cheap. Schiller PE ratio, 29.05. While earnings are falling, Buffett indicator, fairly valued, still expensive relative to the historical trend. Let's do some chart requests. All right, we have Pat, I'll tell you later. It's not a request. Netflix, bullish on Netflix. Short term, it's probably going to do a little bit of a pullback because on a 15-minute time frame, while we finish strong, we're right at resistance immediately above, and we're kind of extended. Even if you do a deeper dive down to a 5-minute chart, see where we're trading right now. We have resistance immediately above on Netflix. But I think that if we get a pullback, in all probability, we're going to rally. So Netflix bullish, longer term, shorter term. Uh, I am a little bit bearish on Netflix, but totally intraday, not on a daily time frame. In short, buy the pullback, especially if we do a retest of 337 on Netflix. Ulta, uh, is this a short? Yeah, you could probably put on a short trade here on a new weekly lower low. I would want to see a validation of the weakness. We rallied up and into this upper band of resistance, and there was an obvious rejection. Daily view, there's the rejection on the 19th, but no new lower low on Friday. So you really want to see a new weekly lower low before you go shorting Ulta. So be careful. Be careful. And seasonality going back 15 years, it's up about 50% of the time, 57% of the times. Paul, CHD, Church and Dwight. Okay. Let's put on some automated trend lines here. It attempted a breakout last week. It was rejected. I think you need to see a close on CHD above 83.60 per share. Stokes are rising. I already took a look at the daily chart. And why is this so wonky? I don't like this. You have resistance right here. Again, 83.60. Look for a close above that mark. Because what we could be doing is that we had a breakdown. And what we could be doing is rallying in an effort to try to recapture prior support. That may be a retest, right? And it could fail. So be very, very careful. If you're going to buy this, I would do it on a close above 83.60, tight stop right below. You are welcome, Paul. Anyone else? Oh, tips for Jeff. Uh, yeah, the tips. They're looking good, man. Let's go to the weekly chart first. Here's our higher low. There's our breakout. So what we're looking for now on the tips is a resolution, right? And what's the resolution? Resolution is this. We have a W formation. Left side, here's your pivot point. The high of that pivot point is 110.20. We have resistance immediately above at 109.07. A close above that mark would have me buying the tips. I would be an aggressive buyer of the tips on a close above this resistance level here at 110.39. There we go. Set it and forget it. So the tips are setting up nicely for the new trading week. Tesla for Jody. So Tesla reports this week. They report on the 25th. I would not be a buyer of the shares in advance of earnings. I'm firmly against doing that. So, Jody, you're running up into a lot of resistance here immediately above at around 138.83. I'm not saying it can't go up higher. In all probability, it's going to. But just beware of two things. You have resistance immediately above, and you have overhead supply. Now, on Friday, this is the value of the automated trend lines on TrendSpider. Take them off, put them on. We broke out on Friday. Expect a retest of the breakout point. Touch, bounce. Now, what we'll probably do is we'll sell premium, meaning I'll probably go 2 standard deviations out on Tesla to the put side and to the call side, and that usually equates to 2 times the anticipated market maker move. Now, the anticipated market maker move at current on Tesla market makers are expecting only a $10 move. I don't believe that. I think that they're going to pump more volatility into that number. So right now they're pricing in a $10 move. Let's say that's ultimately where they decide that they're going to price the anticipated move. Fine. What we're going to do is we're going to double that. And we're going to go over to the probability analysis tab here. And I'm going to change this from a 1 standard deviation to a 2 standard deviation move. And we'll be looking out on Tesla selling premium, probably expiring on the 10th of February, 187 to the 187 to the call side, selling some puts at $93 to the put side. And that'll be the trade for us. Very, very conservative, and that's the game plan. UNH, I almost forgot about you, Pete. Sorry about that. UNH, last one for the night. Weekly view. All right, so UNH, well, I'm surprised at this chart. Last I looked at this chart, it was very strong. But you're seeing some rotation out of these safe haven plays and into the more high risk trades. So I think that you're at a good support level here. It's a great company. You're definitely in a correction, no doubt about it. Lower highs on Stokes. And you have Stokes trading down below 50. Rallies tend to fade. If you're going to put this on as an investment, fine, scratch the itch, and then buy as we begin to break out above resistance levels. But right now, you're in a correction. If you're going to buy here, I would not be aggressive at all. The daily chart is firming up nice. You'll probably get a rally up to $4.95 per share. I would exit and go to cash on it. Wait for another pullback because that's what's going to happen. It's going to be a two-sided trade, and you have to hope that you don't break that support level that we put in last week, or we tested last week. All right, with that, folks, everybody have feedback on the. Do you like the shorter version? Good. I'm glad. Thanks, Frank. We'll talk to you tomorrow. Bonnie Bean. All right, last one. First Majestic AG. First Majestic under pressure here. All the silver stocks took it on the chin last week. I don't expect this to last. I think you need to look at this from a macro view, a 100,000 foot view, monthly chart, and we're putting in higher lows. Check that box. Now we need to start putting in higher highs. I think you could accumulate here on First Majestic. Yeah, I like this daily setup. They beat it up. Yeah, I'd be a buyer here in First Majestic. I think it looks good. Support way down here at $7.74. I don't know if they have premium options on this. Maybe you want to sell some premium down at 750 strike. That's a thought. Folks, everybody have a profitable trading week. Thanks for being here. Like, subscribe to the channel. Be well.